Hi, everyone. Uh, Sothebys International, Lisa Maysonet, for those who don't know me, and Noah, who needs no introduction, our guru, data, God. And Melissa definitely does not need any introduction.
Thanks, Lisa.
Been in the business for 35 years. You know her name. There is no deal that she cannot get done. So thank you for joining, Melissa. Before I start, I would be remiss and completely tone deaf to not address what's currently going on in our beautiful city. The pain, the suffering that we're all feeling right now. And actually, I thought of a quote today that I recently saw from Martin Luther King. And it kind of goes like this. Well, it actually goes like this. Darkness cannot drive out darkness. Only light can do that. And hate cannot drive out hate. Only love can do that. So, yeah. All right. Getting right into it. Today's topic is empowering the broker through knowledge. Things are changing so rapidly, and I describe it as a transaction revolution and disruption. It's evident across many industries, actually. You see it in the financial industry going online, you see retail going online. It's a natural progression that our industry too will go online. So to supplement the change, our role is vital that we must provide valuable information, help our clients understand the market, right? So to that end, we have Noah, who'll help us paint the pictures of today's market based on hard numbers. Few questions, Noah.
Sure.
Did we defy the expectations in May? How did we do in May? What do the numbers say? How many contracts were signed?
Sure. So to answer that question, contract activity came in at 159. In terms of expectations, I don't know if anyone really had any expectations about it. I mean, I could tell you what we typically do. We typically do about 1,000. That's typically what we put into contract around this time of the year. So we came in at 159. So I mean, it's not too unexpected given that we are in the middle of a shutdown, and we're dealing with the ramifications of buyers not able to show property.
Mm-hmm. Well, that makes me wonder how many new listings came on the market.
So on the supply side, we had about 571. And again, if you think back to what we typically get, it's probably closer to about 2,000. So that was actually a little higher than I thought. If you talk about expectations, the prior month we came in at about 280. So I figured that, all right, we're shut down in April. We're going to be shut down in May. I figured the new listing inventory would be kind of similar, would be around 300, maybe 350. Again, given that we're shut down and sellers just don't want to participate. But we came in at 571. I like to think of that as a decent sign, only because if you think about how a typical active season begins, we have two active seasons. We have the beginning of the year, and then we have in fall. If you think about a typical active season, first the stuff comes on and then the stuff goes into contract. So you want to see sellers list. You want to see sellers comfortable with saying, all right, I get the market. I know what's going on. I'm aware of it. I'm going to still list on it. Obviously, I need to have my expectations managed.
Mm-hmm.
But 571 is the answer you're looking for.
Did I lose the screen?
We should still be here.
Do you see me? Because I don't see
Yes.
anybody. Really?
Yes,
okay. I guess I'll have to continue. It's so weird. I don't see anything. But, I'm thinking, are we still seeing sellers pulling their properties off the market? Did you see, what did the numbers look like for off, taken off the market?
When it came off the market, let's see here. I have the number right down over here. 471 listings came off the market in May 2020. Just to give you guys some perspective, 721 listings came off the market in May of 2019. So I like to always compare year over year. Just to give you guys some perspective on the new supply and contract activity. New supply is down 71% from May of last year. New contract activity for May at 159, that's down 84%. So if you think about the big three, Lisa, you got supply down 71%, you got contract activity down 84%, and you got off market that looks like it's probably down around 40% or so from this month of last year.
Mm-hmm. Mm-hmm. Um, what would you say the discount is? Can you give us some color on that? Is there a discount in the price? One of our calls we were thinking 10, 20, 30%. What does that look like?
Um, yeah. So again, anecdotally, all right, because we don't have sales data. All right, we're not going to have COVID sales data for another 4 to 6 weeks. It's probably going to start coming in. You have to think about the lag of Acris and these deals being signed. You have to also understand Acris has been shut down. The city register has been shut down. So they're filing about 13 sales a week when they typically file around, a few hundred sales a week. So they're not filing sales. So we still have a pipeline of February, March to get through before we start to get to the real true COVID trades. Anecdotally, I'm hearing ranges between 5 and 15% about where the market's down. The 5% is obviously closer to the lower end of the price points. The 15% is obviously closer to the higher end of the price points. And then I'm hearing outliers on both sides. I'm hearing outliers, situations where it's under $1 million and the sellers are only going down a couple of percentage points and deals are happening kind of near where pre-COVID levels are for some situations. And then I'm hearing stories on the other side that are really ugly and really extreme. I'm hearing some 35% discounts in the $7 million, $8 million, $9 million range, $5 million range, seeing some 25, 30% discounts. I mean, that adds up to significant levels, but you're not going to see these numbers, Lisa. You're not going to see these numbers until July, August, September. And you got to also think, not every seller has hit those bids. So when I say the broader market is down 5 to 15%, we could probably squeeze that into a tighter range and say the median market's probably down somewhere between 7 and 10%, with some lower end down on the lower end of the range and the higher end down on the upper end of the range. But not every seller has to hit that bid. There's only been 500 deals, 520 deals since March 20th.
I do want to mention one thing. We are specifically talking Manhattan because in the suburbs, Long Island, the Hamptons, and other parts of Texas and stuff, they're seeing a different picture. In fact, on the Inman calls that I was at listening to, according to Zillow, there's buyers out there and deals are being done. They also said that Zillow does not predict prices will come down, maybe 2%, which I found astonishing. But maybe that's because they think of out of borough properties as well. So when you're speaking, we're specifically addressing Manhattan. I just wanted to kind of.
Yeah, I'm only talking about Manhattan, and I think Manhattan's going to go through its own thing like we always do, and whatever the discount ends up being, and again, it'll probably show around the July, August, September timeframe. We don't know when yet. It'll be quick. It'll probably be a quick down move. It'll probably be a quick retracement, and then the market will kind of bounce back to where the median is, which is probably somewhere between 5 and 10%.
So, thoughts for the summer, Noah?
I mean, so the earliest that they're thinking that we could reopen is 2 weeks after phase 1. So that puts us at June 22nd. I did a little math in my head the other day, and I was looking at all of the missed inventory. Right, this is something everyone's focusing on off markets and deal volume, but I was looking at how many listings were supposed to come to market that didn't because of COVID, and it's in the range of 5,000 to 5,500.
Wow.
So
That
if
is
you look
a
at
great point.
it's an interesting number. So now you got to ask yourself, how many of these sellers are really going to be sellers when we come out of this? Right? Is it going to be all 5,500? Now, again, to do this, what I did is I looked at March, April, May, and June. And I looked at typical supply, typical new supply, and I looked at the 3-year averages of what usually comes on each of those months. And then I looked at where we actually came on, and then I looked at a 30-day pace for June, even though we're in early June right now, just to extrapolate some kind of idea. And the number comes out to about 5,300, 5,400 listings. So are all those guys sellers? Do they all come on at once? I mean, I think the buyers, you might have like a temporary resurgence of buyers in relation to the extreme depression that we've seen. It's all relative. And if you think about it, we're shut down and listing activity went boop, straight down. So we're going to have a bounce. We're going to have a bounce relative to these depressed extreme levels. But where do we bounce to? Do we bounce to 100% capacity? No. I think we're going to bounce to like 50% capacity. But that's going to start to happen probably a few weeks, 2 to 3 weeks after we reopen. So I would think mid-July to late July, you'll be able to tell, all right, am I starting to see a change here after the June 22nd opening? Because remember, first the stuff comes on, then the people see it, then they bid, then they negotiate, then it goes to the attorneys, then they sign the contract, then we update in the system. So there's going to be that.
One thought I have around that is, as a broker, as an agent, if there's not a lot of product, then does that kind of, you have more demand of pent up demand and not a lot of product. So don't we take that into consideration as well, maybe to kind of improve the situation price wise?
Well, I mean, it's hard to tell because, again, we have massive deflationary forces right now. So we don't have a lot of product on the market right now because we have such massive deflation. We have a shutdown, and the sellers, the inventory said, I want nothing to do with this market. That's why sellers are not listing. Sellers list when they want. That's why there's not a mass exodus. I've been talking about this recently. Everyone's talking about a mass exodus. First of all, now's not the time to talk about that stuff. And if we were going to have a mass exodus, you would see 1,000 contracts being signed because the sellers are hitting whatever bid they can get to get out. You're not seeing that. Again, you're seeing 500 deals since March, when we typically should see more like 2,500 to 3,000 at this time by this period. So there is no market. The market's very illiquid right now.
Mm-hmm. So, Melissa, I'd like to get your thoughts on appraisals, actually, since we're kind of swimming in that area. And my thinking is, since Noah keeps saying, the numbers aren't out yet, the appraisals, what numbers are they using? And so what's happening now, and what do you think is going to happen a little bit?
So in the purchase market today, I'm actually seeing that most appraisals are still coming in at the purchase price. And that is, as Noah says, that we haven't seen any of the drops in prices and these lower sales having closed and really becoming comparables for new appraisals. We are seeing whatever activity is there, that there are some listing prices that are slightly lower, and that may impact appraisals a bit. But to date, purchase appraisals are coming in on the money. Refinancing appraisals are coming in a little bit lower than people expect, but that's always been the case. Good times and bad times.
Mm-hmm. So what's been the biggest changes that you've seen in the lending environment during this COVID-19?
I think what we've seen is basically the banks are trying to eliminate or mitigate any risk in terms of the loans that they are making. A lot of banks have been badly hurt in terms of how much they can lend because of all of the people that have gone into forbearance. In New York State, Cuomo has allowed anyone who has a mortgage that is regulated, as a mortgage with a bank that's regulated by the New York State Department of Financial Services, has the right to go into forbearance, which means that more than 10% of all borrowers in New York State are in forbearance. And in New York City, there are a lot of people with jumbo mortgages that are now in forbearance, and it's not just the conforming marketplace. As a result, if people aren't making their mortgage payments, that means the servicers don't have money to pay their bondholders, and banks have limited liquid assets in terms of making mortgages. So especially in the jumbo mortgage market, we're seeing banks coming down and saying, we're not going to do 95% financing anymore. We want to limit you to 80% financing. We want to limit you to 75% financing. Second homes are being limited to 70% financing. Banks are also trying to steer away from the riskier types of mortgages. For example, interest-only loans are much harder to get now. A number of banks suspended their interest-only product for the pandemic, stating that when things start to ease up and open back up again and we go to whatever that new normal will be, that product will come back. Home equity loans are much harder to get today. So banks are basically trying to eliminate risk. Financing for investment properties is much harder to get, and financing for foreigners is very difficult to get, especially with the travel restrictions.
What about self-employed borrowers?
Self-employed borrowers, have always had the issue of being able to document sufficient income. When the pandemic struck and banks started tightening guidelines and there was a loss of liquidity in the marketplace, the entire non-QM marketplace shut down. What is a non-QM mortgage? A non-QM mortgage is a jumbo loan where a bank is making the mortgage using alternative methods, generally, of looking at the income, be it a bank statement program, a no-doc program, a program where the banks base the qualifying based on the cash flow from rental income on that property, profit and loss statement programs. Those evolved, they vanished basically in about a week. They are slowly starting to come back into this marketplace, and I think it'll be several months before we really see a strong recovery there.
Regarding rates, what are the real rates? Because I keep hearing you say they're not as low as you hear, and can you speak about that a little bit?
Sure. So if you have someone who's looking to borrow on a conforming loan amount, meaning a true conforming under $510,000, those rates are actually historically very low. Today, I was quoting a client a 30-year fixed at 2 7/8% with no points, which is amazing. But you will see for people who are looking to do cash out refinancing, jumbo mortgages, we have what I call the pandemic pricing, meaning that since banks have less money to lend, that they have raised their rates in order to offset the risk for their what they call these premium lending. So if you ask me, and from the banks that I've spoken to, I think the jumbo rates, and especially from our portfolio lenders, who I think will be the heroes in the mortgage market this summer, interest rates probably could drop by about 0.5%, even if everything else remains the same. So once the right to go into forbearance ends, once banks have the right to foreclose upon, once landlords have the ability to evict again, that's when we will see this pandemic risk-based pricing ease. And if the bond market remains where it is today and all things remain equal, these rates should come down by about 0.5%.
And have the qualifications changed at all for just normal transactions?
The answer is yes. So first of all, I like to think of myself as the ability to get the person who can get almost any deal done, and getting exceptions from banks. Exceptions are really hard to get today. So banks they've tightened their belts a little bit. They're looking for you to have better credit, where we had banks who would lend you with a 650 credit score. Most banks today are looking for you to have credit with a minimum of a 700 credit score. If it's an interest-only loan, at least a 720 credit score. Having reserves is another big issue. A lot of banks have increased the amount of liquid assets that they want to see a borrower have in the bank post-closing. It also used to be that banks would allow you to use retirement assets for reserves. There are banks today that are saying we are not going to allow you to use retirement assets for reserves. We want to see that you have the money in cash. They're very concerned about the potential for a rainy day.
Mm-hmm. Mm-hmm. So, moving forward, what do you see?
I think that we have been through these periods of where banks have gotten very concerned. People are concerned about, obviously, people's having jobs, having income, having good credit. That I think that we are probably at the bottom of where the market will go relative to banks restricting types of financing and getting tougher with guidelines, and that hopefully as we see New York start to open up, and especially in New York City towards the end of this month, that banks will start to go back to a slightly more aggressive stance in terms of lending. I think my biggest concern for mortgages in the future will be regarding loan to value, how much a bank is willing to lend, because there's a great concern here in and I'm talking about the New York City market, with the fact that people expect that real estate values in New York City are going to drop by whatever percent they will, and banks don't want to get caught holding the bag, so to speak. So I'm not going to see a bank that was offering 100% financing go back to 100% tomorrow. I think that we will see the 20% at a minimum will be the new norm. For second homes, for investment properties, banks are going to look for 25 or 30% down. For foreigners, they're going to look for at least 40% down. And I think that this will remain in place until such time that the real estate market itself stabilizes. Now, we don't know where real estate values are going to go. And until we sort of have a better sense of where the New York City market is going to be, banks are not willing to, be on the front line, so to speak.
You keep mentioning foreign transactions, and it just, I'm like, really? There's still banks willing to do foreign loans?
Yes, that's the good news.
That's amazing. That is really
so it's not the big banks, the HSBCs, the United Nations Federal Credit Union, all of the sort of the logical places to go in terms of getting financing for foreigners. Those banks have really pulled back tremendously. But, my portfolio lenders, my non-bank mortgage banks who have mortgage money to lend based on their own portfolio are still happily lending to foreigners. Now, one issue is, for example, I have one bank that will not allow a foreigner to close by power of attorney. So if we have a foreigner who's purchasing and they're not in this country, their ability to get into this country is another matter. But we are working through it, and I think that we will see that bank start to relent and allow people to close by power of attorney.
One of my questions to you was going to be, do you see digital closings as part of the future? And do you see at any point in time where we may be performing closings, say from our car or from our home, digitally?
Well, I'm actually out on Long Island, and we do a lot of parking lot closings as it is right now. And we will see that to continue. So while in New York City it may not be in a parking lot or in a car, someone's in one conference room and another party is in a second conference room. What we are seeing with closings is that banks are still requiring signatures. Banks are being more lenient in allowing people to give their attorneys power of attorney so that we can limit the number of people that attend the closing. We try to make it so that it's the two attorneys and the title closer if possible. If the buyers need to be present at the closing, generally they're in another room. Another thing we're also seeing is that banks are allowing us to start doing what we call mail-away closings, which we've never had in New York, meaning that the buyer will sign the mortgage papers, the closing papers. They'll be Federal Express to the seller. The seller will then send them. They go to the title company where everyone agrees that all the papers are in, and then the monies get wired. This means no more same-day closings, but you can effect a closing this way in 2 to 3 days, and you can be socially distanced safe the entire time.
This might be a little premature of a question, but it's a thought. Do you see any new programs perhaps coming out?
Not really, to be honest with you. I think our hopes are to be able to restore the loan programs that we had in place at the beginning of March. For example, 40-year term loans disappeared. Being able to do the bank statement loans for big loan amounts, being able to do asset depletion. Banks have been nervous about the volatility in the stock market and have eliminated those programs. So while, in February, we were thinking towards what new programs would we be able to offer into the marketplace. I think right now it's really a question of being able to restore what we had. And I'll be honest with you and say that it's going to take a long time before we go back to where we were at the beginning of March.
And when you said restore what we have, I also thought of maintain what we have. And so to that end, it's not what we know, it's what we don't know, those pitfalls. What can you tell us as agents should we be looking out for, so that we don't fall, so that our deals go through actually?
So I think one of the most important segments of the marketplace that we need to focus on with regards to financing and making sure our buyers have financing is in the new construction, the new condo development marketplace. I would say that the average pre-sale for a new condo project in New York City is probably around 30%. And due to the pandemic and fear of what's going on with real estate values and fear of any number of factors, a lot of the big banks who were sort of the big players in the new condo space are starting to pull back and saying that they're not going to finance in buildings unless that building is 50% sold. Obviously, due to the pandemic, completion of construction and the commencement of closings for a lot of these new projects has been greatly delayed. But a lot of these projects were, Wells Fargo, Chase, Citizens, Bank of America had made commitments to finance in the building. These lenders are saying, we're still willing to lend, but the building has to be at least 50% sold. So if you have a buyer who's looking to buy in a new condo development today, make sure that they understand that the commitment letter or the pre-approval that they got a year ago, 6 months ago, even 3 months ago may not be valid in today's marketplace.
I would think, especially maybe if their financial situation has changed, job or stock market or something like that. I mean,
absolutely. So banks are absolutely coming back and they're re-verifying everything just prior to closing, especially income and assets. So it used to be that once you got a commitment letter and you provided your 2 pay stubs and your bank statements, the bank would clear that condition and you were good to go. Now, most banks today, within, say, 10 days of closing, are coming back and asking buyers to provide copies of updated pay stubs, updated bank statements showing that those pay stubs are actually getting deposited into the bank, and asking people to sign what they call a COVID-19 affidavit, stating that they continue to earn a living, if they're self-employed, that they're still profitable, and that they have no intention of going into forbearance. Forbearance is sort of a big bad word these days with banks, and we have, if you think about it, more than 10% of this country is in forbearance today. And a lot of people have been put into forbearance by their bank without even asking. There were so many millions of people that called and asked people to go into forbearance. Banks like Wells Fargo have actually just put their customers into forbearance without asking for permission. If you want to purchase a property and take a mortgage today, if you're in forbearance, you're not going to be getting financing. You can cure it. So if you were in forbearance and you have the ability to catch up and make yourself current and go to your lender and say, I don't want to be in forbearance, please cancel my forbearance, then they can apply and close for a new mortgage. If they don't do that, you have to wait until the forbearance period is over and that your customer has made 3 timely payments on their mortgage to show that they've restored their credit.
Wow. Okay. So this is a little bit of a complex that we are not used to. Mm-hmm. Anything else you could think of, Melissa, that we should be thinking of?
I just think it is really important in today's marketplace to make sure that if you had a buyer, and I just said this before, that if they've been pre-approved or they've been to their bank 2 or 3 months ago, that they need to go back and revisit that marketplace. And they need to understand what financing is available to them today. For us to say, well, I was pre-approved in February and I'm just going to wait till July and everything's going to be back to normal, that's not the case. And I think that especially if someone's buying in a new development with a lower pre-sale or they're buying any sort of property where there's any sort of hair on the deal whatsoever, interest rates are still historically very low. So while you may not be getting that 2 7/8% rate, even if you're doing the deal at 3 1/4 or 3 3/8, it's still historically a very low rate. And my motto with every deal that I go into is the most important thing for a buyer is to get the deal closed. And especially if prices drop, especially if buyers have the opportunity to take advantage of, a great price on a property, they're not going to find that price again. When the economy restores itself and real estate values increase again, that lower price has disappeared. Even if you buy at the lower price and you have to pay a slightly higher mortgage rate, you can always refinance your mortgage. The mortgage is not permanent. The purchase price is.
Right.
And one other thing that's really important is timing. I've seen a lot of deals happen predicated on the ability to get closed, say, in 30 days or 45 days. Not every bank has the ability to do that. So if you are making a deal and that deal is subject to a quick closing, make sure your buyer is going to a bank that has the ability to perform.
Noah, I just thought of something while Melissa was talking regarding pricing. So as a broker, a seller wants to know what price should I list at. And is it still your thinking that we should just look at what the competitors are asking? What is their competition currently on the market? Because because of what I hear you saying is the numbers that are closing now are not real, and I don't want to be behind the game, behind the market. We want to get in front of the market so that we can actually do justice and get the place sold.
Right. So unfortunately, I mean, we're in a shock, and the amount of information at your disposal is going to be limited. So that should be made very clear to your seller client up front. You could look at comps, right? You could look at, and when I say comps, those are solds. Obviously, those will probably be sold pre-COVID, most likely, those closings. So you're going to have to come up with a pricing a pricing narrative and start there and say, all right, well, here's where we were before, and we know we're not up. We're not up, so we're down. How much down are we? And then what I would do is I would do two things. Number one, I would look at your active competition, because your active competition is going to show you the sellers that really have to sell, right? Their asking prices should be greatly reduced. I mean, again, think about sellers that have a forced need to liquidate for whatever reason, right? Sellers are not choosing to sell now. All right, sellers, if they had a choice, they wouldn't sell now. Okay, so the sellers
in my mind, those are not even real numbers.
Yeah, I mean, the sellers that are selling now are those sellers that have to sell, or they want to sell, or they have to sell. One of those two reasons, but they want to get out of here or whatever, for whatever reason. The second thing you can do after looking at your active competition and seeing where those narratives are, where the average prices, median prices, and how you relate to those active. I mean, think about a buyer, right? If there's a buyer and they're going to go look at your property, what are the 10 other properties that are competing that you're in that same competition with? And are you priced better, or are you priced number 10? Are you priced number 8? I mean, where are you in relation to that? And number 2 is look at in contract. But again, this will be limited. Look at in contract. And if you could find one or two good comparables that are in contract during COVID, and get on the phone and get some intel, get some broker to broker collaboration going on here, and get some intel from that broker. And, they shouldn't tell you what the price is, but they could tell you some basis points or how the negotiation went. And then go to your client and say, listen, there's no information right now, but I do have these 5 listings in contract. I called all of them. I desperately tried to get information. Only 2 of them got back to me. And here's the intel I got. And here's how their negotiations went. And here's approximately where that might close. Just to give your client an idea of where it is. And the idea is to try to add to certainty. I mean, because if you're a buyer right now, you're scared. You got massive deflationary forces. I mean, the stock market.
Everyone's scared. There's so much uncertainty. We're trying to.
There's uncertainty, and not only that, but I mean, what sucks for us? What sucks for us is that it's not a one-to-one thing when it comes to real-time sentiment and the sales data. So we see sales data, and everyone's asking us, where's the market, right? And we need sales data for that. We see sales data. That's a reflection of what happened 4 to 5 months ago, 6 months ago. So we have to wait till July, August, September, October to see COVID. And when COVID comes out, that's going to be Q3, right? So Q3 comes out when? October 1st. So October 1st, you're going to probably see a Q3 report
that has a good amount, maybe 60% or 70% of COVID transactions compiled in there, maybe some before, whatever. But where do those numbers come? And we might be kind of seeing activity bounce back, naturally, July, August, and then all of a sudden this Q3 hits, and it's like prices down 15% in the headlines on Bloomberg.
I just had this like light bulb when you said September, October, and thinking, what happens in November?
Well, that's another uncertainty, and buyers maybe wait. All these uncertainties do two things, right? In deflationary times and with times with high uncertainty, buyers either go on the sidelines and pause, or they bid less aggressively. And you're seeing both of those today. So like we're about to go from this period of no market, no liquidity, no discovery, no intel on what's going on, very, very, very illiquid, low volume, dislocated. And we're about to go into a period where we're about to reopen and we're about to see where the hell we're at. Right. So we're going to get a lot of information over the next coming weeks. Is it going to be tons of information? No. But is it going to be a lot of information relative to where we've been for the last 6-7 weeks? Yeah. Because we're seeing 30s and 40s of contracts signed a week. And I would think by the end of July and into August, where that gets over 100 on a weekly basis. It should be at 250. It should be at 250. We should be putting 1,000 deals and contracts a month. And during our active season, that's 250 a week. We're at 30s and 40s, just to give perspective. We're down 85%. So I expect a retracement bounce when we open the doors. And is that retracement going to be 100%? No, it's going to be 50% or something. I don't know. But maybe we go back and you're going to be doing at least, 125 deals a week. Then we're going to start to get some information. Then we're going to start to get some color. I'm going to be doing my interviews. You're going to be doing your stories and discussions, trying to convey where the market is.
I just want to put it out there to all the agents that are listening. The truth is, this is an opportunity for us because of all the uncertainty. We're actually, our role is to provide valuable information, and we are in a position now to help customers understand the market. So it's our responsibility to continue to educate ourselves. Thank you, Noah. Thank you, Melissa. It's really important that we become the advisors, that we become the knowledge brokers. Those are the brokers that will maintain their position, get market share, and will survive this.
Yeah, and let me just say one thing, Lisa. Let me say one thing, because there's a comment here about how co-op boards might not show the price action. I just wanted to touch on that. True, great point, and that's why I wanted to touch on it. Co-op boards are if that deal's down 25%, it's one of those outliers. They may just say, sorry, that doesn't really do us very good. So the condos, especially the new development condos that are doing some deals and going to close, those are going to show your true price action. Okay. And the best thing you can do, think about a nervous buyer. What would make a nervous buyer feel less nervous, right? The best thing you can do is show them weekly production. And when I say production, I mean how many listings came on our market, how many listings went into contract, how many listings went off market. And do this on a weekly basis and get some rapport with your clients and get them to understand how bad we got hit. Like we're down 85%. We're going to retrace. We're going to bounce off that. And when your clients start to see that the weekly contract activity goes from 35 to 40 to 50 to 80 to 90 to 100 to 120, you can now tell them, you see the market starting to come back and activity starting to come back, which is a good time to get in before the price action discount window closes, right? And that's the key narrative.
Right. Are you seeing any more questions, Noah? Because I don't have the ability to see.
No, someone was asking, what do you do about pricing a property that doesn't have any like comparables on the market? And there's no good answer. Sometimes you have buildings that have very low volume. Sometimes you have a property that's a penthouse, or it's a terrace, or it's something really, really unique. And you can't find many comparables. Look, if there's no data, there's no data. You're going to have to just use whatever is at your disposal, whether it's price per square foot, median sale price, or if it's in a building, I don't know if this is a townhouse or something else, but if it's in a building, try to find some building information, even if you have to sacrifice relevancy. When you have nothing relevant, go back and sacrifice recency. That's a good, and then go back to the building and go, is there something 3 years ago, 4 years ago, 5 years ago? Did this thing trade 4 years ago and I have that information? Maybe you could extrapolate how the market's changed in the last 4 years.
Or similar properties.
Yeah, I mean, that's the only thing you can do when there's nothing. Because when you go outside the building, you're introducing a dozen variables anyway. And the last thing you want to do is go outside the building and use something that's not even close to comparable. So.
All right. Well, I think this was very informative. Thank you, Noah. Thank you, Melissa.
Thank you, Melissa.
And,
thank you both.
Yeah, and we definitely need to stay on top of our game because things are changing week to week. Oh my goodness. Just last week, all we talked about was COVID, and now this week was a different conversation. And as we get closer to the election, and that'll be a different conversation. So it's very important for us as agents, brokers, mortgage, the whole industry to maintain the realism, the real numbers, and what's really happening. So again, thank you very much, and have a great week.
And Melissa, I just want to say that you're amazing. I forgot how amazing.
Thank
Melissa
you, Noah.
Oh my God. This was a wealth of information. Thank you so much.
My pleasure.
Thank you. And we'll see you again next month.
Yes. Bye everyone. Stay safe.
Bye-bye.